Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman. He's a portfolio manager at PI Financial in Vancouver. His website, pifinancial.com. You can also find him at polarfuturesgroup.com. Welcome back to the show, Drew.
Thanks for having me on, Jim.
Gold is at a near high level in a year and a half. What's going on with gold prices and what's behind it?
Yeah, we had intraday prices today, and gold hit 1.5-year highs. If I could put one word on it, it seems to just be tensions. There's tensions brewing everywhere, whether it's been trade tensions that the U.S. has had with China over the last couple of weeks, and then more importantly, that caused the big run-up in gold today to 1370 was the U.S. conflict with Syria, and not just that it's another possible missile attack into Syria for alleged chemical weapon use there, but also what that attack would mean on U.S.-Russian relations, as Russia seems to have the back of the Assad regime in Syria. And then on top of that, again, we had some explosions in Saudi where Iranian-backed Houthi rebels in Yemen were sort of launching some missiles into Saudi Arabia. They were able to hit them while they were still in the sky, so no damage was done. But again, attacks still happening there. So there seems to be just tensions building everywhere. And when you do have these sort of events happening, or the possibility of these sort of events happening, and, the hope is always that it will just be one-offs, but always the fear of, can this escalate? Can something go wrong? When these sort of things build up, you do see mistakes happen, and that's sort of the last thing we want to see. But in that environment, gold does still get that sort of global safe haven, just in case shit hits the fan, to speak crudely, sort of event happens. Let's have some gold. This could be a good safety asset.
Are you surprised the price of gold hasn't gone up more than it has?
No. As a matter of fact, I thought we could see gold and silver, both precious metals, come under some pressure. I think we've seen interest rates moving up faster than we had inflation, and in that environment, when you have real rates moving higher, you do tend to see precious metals come off. So if you look at real rate forecasting of where the precious metals should be, I think the precious metals should probably be lower. They've stayed in a very tight band over the last several months. The U.S. dollar has stayed in a tight band over the last several months as well, so not as much weakness in the U.S. dollar that would help the precious metals do better. So there's a lot of forces more than just the safe haven asset that are coming into play on the precious metals. I think that as they stay in this range, that if we were to see a move out of it in one direction or another, it could be larger than many might expect. It's kind of like, a spring being coiled up, and when it does bounce, it will bounce with more velocity than it would otherwise. So watching these levels is critical, I think, and again, given the amount of tensions globally, the upside does seem to be tested. But again, today we had the events that brought us to the upper end of the range, and gold is now, $15 off the high of the day, which leaves a pretty long shadow on your candle chart above the day's price action, and again, just getting to that sort of upper end of the range and getting turned back down. So until we get a definitive move, it looks like gold still wants to stay range bound, but I think it is a market that more and more people are watching to say, when this goes, it could really go. So keep your eye on it.
If there is a rapid rise in the price of gold, what's going to go on with silver?
I think that's going to really depend on why gold is going. So one, I mean, silver does tend to be the higher beta. I think if it's a trade issue, gold would do better. That would just be a guess. Again, that the higher beta may take more influence on that. But again, if it's more of a trade issue, I think there's more industrial use for silver that would be impacting the price. So you would see, I think, copper moving lower, but gold moving higher, and silver sort of being the in between the full precious metal and industrial metal. So not moving as much. If it was going to be more on geopolitical concerns, then I think you could see silver do incredibly well. Again, being the higher beta asset class, that if it were to break out, it could really run on a percentage base quite a bit faster.
We'll have more with Drew Zimmerman right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, oil is at a 4-year high. What's behind the higher price?
Just as we were talking about gold earlier on the show, I think it's the risk premium of the geopolitical tensions in the Middle East. Again, with possible attacks on Saudi this morning, really got the oil price running higher, even though we did have U.S. inventories out again today. U.S. production, again, moving higher. Just week after week, U.S. shale production keeps coming online. So it's more the risk premium that's getting priced into the oil market, regardless of some of the U.S. Production growth that we've seen over the last year, especially. But especially as we get prices to this level, it just becomes so much more advantageous for, not just the main Permian Basin play in the U.S., but all the other shale formations, at $67 oil start to look a lot more attractive. So I think the U.S. production keeps coming online. But again, if there's risk with any sort of Saudi-Iranian conflict or issue going on, all it takes is one event, and you can have a tremendous amount of oil come offline, which will then drive up prices. So again, in recognition of that risk, we've got to start pricing in higher prices earlier.
And if the U.S. starts putting new sanctions on Iran, because they're pretty heavily involved in this, that would have a big effect on crude prices, wouldn't it?
Yes, I agree. I think it would. I think it would impact Brent prices more than WTI prices. But again, anything that takes global supply away, would there be a way for Iran to circumvent The sanctions would be the other side of that. But again, if they did come immediately, I think again you would see a sharp reaction higher in the price of crude oil.
What impact has China's introduction of the petro-yuan had on oil?
I would say it's had a limited impact on the market that we have seen now. I don't want to speak too early. It's very early days with that contract and how it's trading. There have been some big commodity houses that have already traded in that space. So without trying to have to bite my tongue later, I'd like to say, let's see how it develops. Let's see how it is used in the global sort of trade of oil. I mean, China has become one of the world's biggest importer of oil. So if they can start trading in their own currency rather than the U.S. dollar, that's going to be hugely beneficial for their goal of furthering the yuan as a global currency. But as far as our pricing benchmarks go now, I wouldn't say that there's been, a premium or a discount built into them given the pricing of the yuan contract.
We'll have more with Drew Zimmerman right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, is this new multi-year high price in the price of crude help the Canadian economy?
Yes, I think it's beneficial for the Canadian economy. Obviously, when prices go higher, we saw that the huge impact it had when prices dropped from $100 to $26 at the end of 2014. So when we do have prices moving back up to the, mid to high level of that range, definitely beneficial. The other key component to watch there is we have Canadian crude that trades at a discount to WTI, and that discount 2 months ago was trading at $30, and crude was trading much lower 2 months ago. It's now trading at a $17 discount, and crude is much higher. So Canadian crude's actually seen a roughly 50% price increase over the last month and a half. So the Canadian economy is definitely seeing a benefit from that, and it will take some time to trickle through the economy, but where we've seen it a lot in the last 3 weeks has been the Canadian dollar. The Canadian dollar has done much better, and I would say a large portion of that has been due to the rise in our Western Canada Select crude oil.
Yeah, we were lucky. I think the Canadian dollar held its own when the price of oil was going down for such a long time. And then it really lagged the price of oil coming up.
Yeah, the correlations for the Canadian dollar have ebbed and flowed. We've been more focused of late on interest rate differentials as central bank policy diverges between Canada and the Fed. So as it was seen that maybe the Bank of Canada was going to slow policy a little bit and the Fed was going to keep raising rates, then the Canadian dollar came off as the interest rate differential moved further in the U.S. dollar's favor. Now, I would say it's still, near where it was a month ago when Canada was trading 3 cents lower. So that correlation or that driver of the market's been not completely ignored or forgotten, but more so given the resurgence in the price of the Canadian crude as well as the hope around the trade agreements, mostly NAFTA. The Canada, the U.S., and Mexico will come to some sort of agreement that won't be hugely penalizing for one or all three of the nations. So the hope that something can get done there rather than when it was looking very bleak 3 weeks ago. Those two drivers, I would say, have really helped the Canadian dollar, given that the U.S. dollar has largely been in a sideways pattern for the last couple of months. So it hasn't been a huge U.S. dollar story. It's been more about what's the direct impact on Canada.
What's the one market you would keep the closest watch on as we continue to go through an environment of heightened tensions?
Well, the headlines will go to the stock market, would be my guess. I think heightened tensions make it harder for stocks to do well, but the one I really want to keep my eye on and do most times is the U.S. dollar. If the U.S. dollar starts to get some safe haven flows, then you really see that impact come across through a lot of the commodity markets. Harder for commodities to go higher with the U.S. dollar, although gold, I think, could move up with the same U.S. dollar strength just because of the safe haven flows. But it will also be interesting to see if bonds are able to get safe haven flows. They didn't see maybe the larger rise I thought we would see in bonds over the last several weeks as we have had some stock volatility, and that seems to be because the Fed is willing to move forward given the inflation and employment outlook in the U.S. rather than being as concerned with the stock market. It was always sort of thought that there was going to be a Yellen put or a Bernanke put below the market, where now the stock market is at such a high level over the last 9 years. I think the Fed is willing to say, we can give that market some room without having to be overly concerned. If we're more concerned about the employment picture and inflation, then we need to stay on track and raise rates, albeit gradually, but continue to raise rates. Then especially at the shorter end of the curve, you see rates still moving higher. So even if things get a little bumpy, I don't think that we see the possible big bond rally that a lot of people might be looking for. So I want to keep my eye on the U.S. dollar.
Drew, thank you so much for chatting with us.
Well, thank you very much for having me on, Jim.
My guest has been Drew Zimmerman. He's a portfolio manager at PI Financial in Vancouver. His websites, pifinancial.com and polarfuturesgroup.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. If you have any questions for the show or our guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.